Good afternoon, everyone. How are we all doing? Um, Good afternoon to the online community as well. I was hearing that what I'll call him the master of ceremony now, talking about folks that were stuffing themselves during the tea break. There's always a challenge taking a session after people have had something in their stomach. So bear with me, please, and we proceed. Uh, can I have my slides up, please? Okay, fantastic. So I guess for most of us here, we've been hearing about fintech, and I'm sure that in some of our firms already, those who are lawyers, whether in-house or um, in private practice working in a firm, you've probably been involved in a couple of fintech transactions, or you've heard about fintech. And the interesting thing there about fintech is that it's a combination of different practice areas. So, like I was telling someone, if you're an oil and gas lawyer, you're pretty much fine in where you are because you just have to be reading on oil and gas, right? Just be finding out the latest things around the industry, and you grow from that. But fintech is an ever evolving area. We don't have any, um, okay, well, template is one word, yes, but that wasn't the word I was going for. We don't have any existing statutory book that says this is fintech law, and like how you have the Petroleum Industry Act, for instance. So you pick that up and you know, okay, this is what is going on. With fintech, you don't have that. You then need to have a fair knowledge of different things along the way. Some corporate commercial knowledge is definitely key because you'll be looking at quite a number of documentation. You need to be able to advise the clients on what agreements are, what type of agreements they should go into that would be beneficial for them. You need to have a fair knowledge of intellectual property because when you're dealing with a tech company, most of what they have is IP. This microphone that I'm holding now is basically lives around intellectual property because it wouldn't have value if you didn't have a name to it. Even though I've not heard of this one before, but there's a microphone. Somebody will say, "Oh, give me a Shure microphone." Those who do maybe singing or public speaking know the microphones. Or if you have an Apple phone, for instance, how many people use Apple here? An iPhone, and okay, not so many. You guys are all Android people. Okay, I don't use Apple myself, and I wanted to throw some shades at Apple, so it's good that we don't have too many of them here. But you're here, okay. Silent. But the thing there about Apple products is that they have like a tribe, around them. They always feel, no, if this is not Apple, I'm not using it. I've tried to use a MacBook a few times, and it's almost as if they did reverse engineering on your. Okay, no, okay, let me not shade them too much. No, but what I'm trying to say is, it's arguably one of the most valuable companies in the world, and what drives their stocks up is the intellectual property that they have. They have so many patents, over 1,000 patents. They're consistently improving on what they have, and that leads to their valuation at the end of the day. So you need to have a fair idea of what intellectual property is and how it operates in the tech space. Of course, a fair idea of policy, is also required because you would need to let the clients know what the new policies are. There are quite a number of regulators that drive the fintech space in Nigeria. You have the CBN, you have the SEC, you then also have the FCCPC as well coming into play, and a few other regulators. So you need to be able to understand what they are and how they interact with your client's business. Um, yeah, those are some of the areas that are crucial. Of course, dispute resolution is fine because you will then have issues where maybe somebody is challenging them on a few matters. I mean, I still had a call this morning, for example, where a client was providing services to one of the investment houses on their fintech platform. They are now having challenges around that. So the client needs an urgent call, which we have set for later today, where I have to explain to them, you know, um, the supposed breach that exists and then the termination clauses, of which there is none in that agreement anyway, but we then have to look at how they can terminate. you don't sometimes have to be the repository of all of this because I mean, how many things can you do now? I've been practicing law for quite a number of years, so. But it always helps when you are that person who can guide a client around the different challenges they will face in the fintech space. And like I said, there really is no one law, that takes care of that. This is how clear this thing will be. This is, lawyers would like to boast a lot and say, I've done this, I've done that. But next slide, please. Let's get to the serious stuff. So, fintech, of course, it's a combination of financial technology. So what you call a portmanteau, that is, you just join it together. And now there are many of them now. There's ed tech, health tech, prop tech. Even in fintech, you then have pay tech, lend tech, and all the other techs that come out of it. Africa has a total of 9 unicorns. They now put, I don't know if you guys have heard of Oturu before. It's it's led by a Nigerian, but it's a US company. But since there's a Nigerian there, we decided to just add it so that we'll be increasing the number of unicorns we have. But it's a relatively successful fintech. There's Andela as well. Cheaper cash. Well, cheaper cash is not technically, so I think there's some issues here because cheaper cash is I think the guy is from Uganda, even though he's now in Nigeria, so that wouldn't really even put him there. So yeah, cheaper cash shouldn't be there. So it's 5. Into switch, is Susu, quote and unquote, OPay, Flutterwave. Those are the ones we have. Next slide, please. So fintech has continually become more important as the years have gone by. But fintech has actually been around for quite a number of years, just being used in different places. Fintech was initially more like a back-end thing. Now it's more front-end, in the sense that it dealt more with taking care of the technology at the back, taking care of things that would make financial services more effective to people. Now it's more front-end, now dealing more with the technology, and how you use it, the interface, and how you work around it. But if you look at it, there has been this consistent innovation that has been taking place, which is what has made, banking and finance, delivery of financial services more effective as it is today. Think about it now. In the 18th, 17th century, there was no internet, as we know it. There was nothing like that. So people were using horses and different things. Chariots were actually a form of technology when they came out, because before then people were using leg and horses. But just imagine when the first chariot would have been created, would have been like, wow, you can move from here to one side. And we'll do the little, historical check on how fintech has evolved from where it was a couple of years ago to what it is now. And it's still evolving. And it's quite interesting, really, because when you visit other jurisdictions, right, you would realize that fintech is great in Nigeria now, but we're still behind, kind of, because digital banking, for instance, which is still something that the Central Bank of Nigeria doesn't have regulations for, and is still fighting with microfinance banks that are using those licenses for digital banking. It's been on for so many years, in the US, in China. They've moved beyond what we are doing. So it's fine for what it is, but there's still so much innovation that needs to take place. So I just explained there's a broad category that refers to the innovative use of technology in the design and delivery of financial services and products. So basically, trying to make things easier, trying to work around things. We're going to look at the different classes of fintechs as they are, and we know them, but we'll just move gradually across it so that we don't have information overload. And I'll try and make this as simple as possible, because it's an introductory course. So it involves a gradual interlinkage of finance and technology over the centuries. So from 1886, when did Nigeria become colonized? When did they come and... That was 1886, right? That was when the white man came formally now and made Nigeria the colony. The German and all of those. Anyway, sorry. My class is ahead of some people here. So there's Fintech 1.0, Fintech 2.0, and Fintech 3.0. Next slide. Let's look at what Fintech 1.0 looked like. So You have things like telegraphs, railroad, canals, steamships. They allowed rapid transmission of financial information. So you need to be able to understand what was happening before then. And I mentioned horses and chariots, right? So if I wanted to do a financial transaction, it would then mean that, I mean, let's not even try transferring money from Nigeria to, say, the US. That would have been impossible because, man, with canoe, it would probably take like maybe like 1 year before the money will now come. Finally, here is the 1,000 naira. You'd be like, man, but this thing has expired since now. So it was crazy. So when you now had railroads, steamships, it then meant that maybe what I've just described now from Nigeria to maybe it will take you 6 months because you and all of that. But telegraphs were now something that, okay, will probably take you, I don't know, maybe 3 months because you would, pass it across, you use the courier services and, but it was a gradual thing. If you watch some of these movies in the Wild West where they will say that there's a ransom, you see how long it would take for that ransom money to get to. In fact, it's possible then that if there was a ransom and they said, if you catch this criminal or kill this criminal, the money you will get will be 1,000 shillings. That criminal can probably be killed and they won't know. In fact, they would doubt, so you probably need to carry the person's carcass across so that you're able to show the sheriff and say, see the person that I've killed. That's the kind of things that were happening then before you get your money. And after you've shown the sheriff, you will still take the sheriff several months to get the money across to you. But that was the era that was existing before the likes of telegraph came that now made things easier to move along. You then had the handheld financial calculators produced in 1967. So some of these calculators we can use to make things easier. But you now started seeing a little evolution when the first credit card created by the Diners Club came into being. What had happened was that the creator of this card went out for dinner, hence the name of Diners card, and forgot his wallet at home and got to the restaurant and he had eaten already and didn't have money to pay. So he had to go through a number of things. And he now felt, what could happen if you could actually go somewhere without money, and you can actually make a payment for something, without money again. And so you can see how sometimes fintech evolves because this was something that was really very simple. Now you can just use your debit card or your credit card to do a number of things, but that didn't exist then, and if you went out without money, you had a bit of a challenge. So the Diners Card Club was quite simple in itself. It just meant that a company was now set up, for me this Diners Club will be issued. So let's say most of us here are members of the Diners Club. We will then have our Diners Club card. We could then go to a restaurant and eat and then give them the Diners Club card. The restaurant will then contact Diners Club who will then make the payment. So it wasn't as advanced as it was then, as it is now. But it was a movement from the fact that you didn't have to use cash every time. You could actually do credit, and then the American Express moved on from that, and then MasterCard came into force. I think that was 1967, but we'll see that. Then the fax machine as well went mainstream in the 1960s, thereby making in-time communication possible. So you could then fax and say, we've made this payment, probably take about 3 days to get across, stuff like that. Next slide, please. Then in Fintech 2.0, so as Fintech 1.0 was ending, like I said, MasterCard came into force in 1967, thereabouts, which then meant you had debit and credit cards. American Express also came in, that was like 1958, thereabouts. But of course, that was almost limited to America, because that's where American Express is, basically. So America already started using credit and debit cards, which was a technological advancement, again, which is why, it's important that we bear in mind the advancements that take place. And also to understand, like I said, that sometimes fintech is back end, sometimes it's front end, so that we would always have that at the back of our mind when we think of fintech products and services. The first ATM was deployed by Barclays Bank in 1967. I don't know what year ATMs came here, but it actually shows you when the ATM was invented. I think it's the chairman of the U.S. Reserve Bank, which is like our central bank, said that was the greatest invention ever known to mankind, because the fact that you could just take a credit or a debit card to a machine somewhere, enter a few numbers, and then money comes out, incredible, right? I mean, That didn't exist before. I wonder what he would say if he realized now that there was cryptocurrency, that people are just doing all manner of things and be like, what's the meaning of that now? Digital money that you can't even see based on, anyway. I know that one of my friends will be taking something on blockchain and cryptocurrency later. I reserve my comments on crypto anyway. So 1968, the Bankers Automated Clearing Services was launched, providing same-day transfer of funds between banks. It took a while for some of these things to come to Nigeria, though. Especially for those of us that did our university. Let me not call the year that I'm, I'm not that old, really, but relative to the room, it can be a bit different. Then there was SWIFT, which allows interbank, such that I can go to GT and make a transfer, right, to America. That couldn't happen for a very long while in Nigeria until maybe like, I don't know, the 2000 or something. But this was created, and banks sign up to SWIFT. In fact, let me even use something to explain how this SWIFT and this automated clearing happened. Because for those of us who may not be that too old or too young, what used to happen in Nigeria then in the 1990s was, if you wanted to make a transfer, if the account you opened your bank in was in Ikeja, GT, you wanted to make a transfer to Diamond Bank, Tikoyi, you wouldn't just go to GT and just say, do transfer. No. You would need to go to that person's bank in VI and deposit the money there. And then they will now give you the something. And then you go. That was what banking was. So you will now see one line. I remember then when I was in University of Ibadan and I'm going to pay school fees, there was one very long line. It won't take you one day to make that payment. So it's not as if now you don't know. You may line up that day till 3 p.m. You can't make it because the line is long. You will now come back the next day. You will now tell somebody, keep space for me on the line, so that when you wake up, you may not even brush your teeth. You just go there and line up so you can pay school fees. And the bank only had one branch in UI. So we'll just go there. Think of it now that with your phone, you can just say, let me pay this thing, just do transfer. Or your parents can even do. Think of the internet bank. Think of the things that we can do now. This did not exist then in Nigeria. And I'm talking about 1977. Before you say, so he graduated then. No, that's not. As in this was, anyway, crazy stuff, right? But yes, then if you wanted to do, all these international transfers, you only had Western Union and MoneyGram. Those were the only two IMTOs, international money transfer operators we had in Nigeria then. So you will now go to, I think it was UBA and, was it First Bank? Something like that. Those were the only banks that did those things. So you will now go to them. Now tell them, I'm expecting money. They say, okay, come back. Man, it was crazy. So when these things happened, they led to quite some devolution and changes in how you would do banking, as it were. And these were technological advancements, hence the Fintech. So it was Fintech. And then in 1995, Wells Fargo started using the internet for online account. Now, also remember that during these times, there was no internet. To even make it more complex for these guys, internet hadn't come. In Nigeria, mobile phone started, I think it was 2001 or something like that. So again, think of, and when internet started, mobile banking and internet banking didn't start in that 2001. Probably started like, 2010, thereabouts. So, but the internet, came, and so they now found out, you can actually use it to open account and check your accounts. Well, 2005, digital banks had already started coming. In Nigeria, again, like I said, most of these guys like Alert, VFD, Sparkle, and some of them that do digital banking, they don't have a digital bank license. And so sometimes CBN will be reminding them that what you have is a microfinance bank license, which has its own thing. Maybe I'll just break down some of those terminologies, but next slide, though. But this was FinTech 2.0. In other words, a progression from where things were then. Then you now had FinTech 3.0, which was shaped by the 2008 global financial crisis and the events following it. So maybe I'll just explain a little bit about this financial crisis. Did anybody know when Soludo was CBN governor? Let me just do show of hands. And this is not a shade or anything. If you were, okay. No, not that you read this in the paper and say, okay, the Anambra governor now was CBN. No, as in, Okay, you're not that young. I say, no, now. So it's okay. So it's one thing to experience it. It's another thing to be in secondary school and say, okay, there's somebody. Anyway, don't mind me. I'm doing this because some of us had, like the MC said, several, slices of whatever was out there. So, just so that we can stay awake. But during that Soludo's time, if you remember correctly, bankers were flying high. You almost wanted to be a banker then. You know, I, I, I actually, when I was in NYSC camp, I contested for Mr. Macho then, which I won. By, by the way, I mean, no, now time and chance have happened to us now. So, but back then I was really ripped and all of that. But while I was standing on the line, then banks would be coming to NYC camp to recruit now. They just told me, they said, that guy at the back, that guy. So they brought me to the front. They gave me, so they invited me to come for my, for my interview, which I aced. So they said, come for your letter. So I went there to collect my letter that day. The letter was ready. I'm not joking, as in, letter was ready. The guy wanted to give me, the guy said, by the way, what did I get in mass? Now, note that then banks were paying quite high for NYSC. So most of them, if you've ever read some of the things I've posted sometimes, I wasn't a very great mass scholar back then. I'm not ashamed to admit it. So I told them, I know that they pass now. The guy said, I know, they can't give me. I said, but from that time now till now, how about now, bros? The guy said, no. That they pass in mass. Don't feel sorry for me, don't worry. Because someone was like, yeah, no, it's fine. God has a plan for everything. So, now, they actually told me that, do I have anybody who did well in mass? So I had this friend of mine who was an engineer. I said, okay, I know him. So I told him, he went, and they gave him the job. That means that they actually wanted to recruit, but unfortunately, that didn't work out for me, which I'm glad that it didn't. But then bankers, they wear very nice suits, they were turning up, So imagine being a copper and being able to, you want to show yourself now. But it didn't work. But then banks were doing a lot of things, in the US where the crisis really took place, but it cascaded globally. They were lending to people in a way that didn't make sense. There was a lot of housing surplus. So people would approach banks, they would give them loans for houses. If you are familiar with the way the credit system works in the US, you need to have good credit before you can get a loan. But then it didn't matter. Somebody wouldn't have a job, they would still give him loan for house. And then they were now collateralizing those loan facilities. They would turn them into financial products and services and then be selling to different banks, So they turned those debts into financial. I mean, it was just crazy, and this ran into billions. Around that time too, bankers here were flying private jets. This guy that used to run Intercontinental Bank. Then what's that his name again? They were larger than life personalities, and then this thing now burst because those facilities became due. People couldn't pay. People lost their houses, they lost their jobs, they lost their livelihood. I mean, there was a global depression. Around that time, Soludo was trying to change, the naira something to be from 100 naira to $1 and all of those kind of naira denomination things. But all of that crashed, and the whole world didn't trust banks anymore, because if banks could do this, if Lehman Brothers, they used to be this very big bank. Think of maybe like, I don't know, Zenith Bank in Nigeria crashing, as in crashing to bankruptcy, not that they can even find anything, crash completely. Nothing remains. Lehman Brothers is now past tense, So that was the kind of bank Lehman Brothers was, and it went away completely because of this global financial crisis. So billions were lost in that. And so people now say, so this is what banks have been doing with our money since. They didn't trust them anymore. And so people were now restless. You now had bankers who were working for so many years, couldn't do anything because they've now lost their jobs, and banks cannot even employ you because banks don't have customers and all of that. But with every tragedy, there's an opportunity, right? And so that now led to Fintech 3.0. If you look at the previous Fintech evolution, they dealt more with the back-end things. You were dealing with, stuff around, trying to create the technology and stuff like that. But now, you had a situation where people were now thinking front end, how can we make banking less cumbersome? How can customers, bank? How can customers trade? How can customers do things without the necessary confines of a banking hall or the stress that comes along with it? How can trust also come to play? Which is where cryptocurrency now came, because it now meant, okay, it's decentralized. You don't now have central banks, you don't have central governments dictating money. We will be the ones who would, dictate, well, as until the likes of FTX came and I'll be scratching your head around all of that. But yes, let's have it encrypted, let's use algorithms and let's use all of that, which was what led to quite a number of things that happened. But something also came into play. Next slide, please. Arguably, what some people would call the most important intervention that ever happened. And this is, for the Apple people now, this is where you can now flex. The iPhone launched in 2007. And what the iPhone meant, because some people, again, smartphones, just, wow, this is such a good phone. Some of you probably used Nokia 3310, or you would have heard how legendary that phone was, because back then in school, that was what we were all using. Now, it was quick, it was fun. It was just someone said it was wrong. But the iPhone was a game changer because you could now do so many things that were hitherto unknown with a phone. You could now do all of that. And so smartphones now started coming. So you could now bank with your phone. You could now create accounts. You could do so many things. And that revolutionized so many things around fintech, in a very advanced form. But some of the reforms that took place that also led, let me just deal with them, so you had teams downsized, of course. You didn't now need so many people, but you are now using technology to drive a few things. I've spoken about the distrust, the smartphone penetration. When people looked at the traditional capital markets and financial institutions, they felt that they needed more. There was a shortage of physical banking infrastructure, so it wasn't enough to meet the needs of everybody. Even in Nigeria now, we're still having that challenge, but fintech is helping with penetration. Behavioral predisposition for convenience over trust. We want to actually have things easy for us, just quick, which is what fintechs probably do. Then I've already mentioned the large unbanked and underbanked population. So now, when you now come to some of the examples that led to this, you now had the iPhone and M-Pesa. If you're familiar with M-Pesa, they are, very revolutionary fintech for what they did and are still doing. The users of M-Pesa in Kenya are twice the population of Kenya. So that means probably each family has, more than one M-Pesa account. And it's a very efficient mobile money system whereby you can just make transfers, do everything that you want without banking facilities, but just using credit and recharge to transfer money and do a lot of banking and facilities. And you don't need a smartphone to use M-Pesa. 3310 will work just fine with M-Pesa. You then had Wealthfront, which now comes with all these features around investment advisory. You don't now need to go and look for a stockbroker and say, this is what I want to do and all of that. With technology now, they can determine the stocks you will invest in. It's gone further than that. You now have robo-advisory and the rest of them. But yeah, this came, which meant that the stockbrokers had their jobs in jeopardy. I've already mentioned Bitcoin, and all the different things. Then crowdfunding also came. Alibaba, they introduced loans to SMEs on his e-commerce platform. So now, again, it now meant that if you just went to Alibaba and you were using them to do your... So Alibaba, like some of us will know, is like your Amazon, right, in China, largest, e-commerce platform in China, valued in billions, But you can now get loans from an e-commerce platform, which again would have been hitherto unknown before then. You now had, the likes of Lufax coming with P2P money transfer. I'm sure P2P, peer-to-peer money transfer is what, what's the name of these guys that took Nigeria's money? MMM. That's like P2P, whereby you and I can go on the platform and then loan to ourselves. It's a very convenient way, and if not that we tend to be fraudulent in this part of the world, it made a lot of sense. But when you promise returns that are unrealistic, that's where challenges come. And then we are greedy again and corrupt. It's just terrible. Sure. Then in 2015, India announced the creation of 11 new payment banks, which also helped, like your PSBs. India was one of the front runners in the whole PSB thing. Next slide, please. And so these are some of the top trends that will shape fintech subsequently. But maybe, and I don't want to, because this is an introductory course, so the organizer said, let's make it just as, what would I use now? Basics. So I'm not going to work on any presumptions and assumptions. Again, like I had said when I started, I know some of us have done quite a bit, but it's always good to just work with the basics, especially for an introductory course. There are a few things that we need to bear in mind. Mobile banking is, so there's mobile banking, right? But there's mobile money, and then there's also digital banking, right? We know the difference, and then there's internet banking as well. There are differences across them. So I'll probably just break them down in like 2 minutes. So mobile banking means that you can use the mobile app from the banks to bank. So you want to do a transfer, you want to receive money, you get a mobile banking app from any of the financial institutions that you use. Digital banking is where you use a digital bank. So digital banks are banks that don't have physical structures, or they don't need to have physical structures. So you don't need to go and line up to open the bank account. You just go to their platform, you indicate, they probably have a chat bot or an AI that will interact with you, and then in less than 5 minutes, you can open the bank account. So that's your digital banking. Your internet banking is almost like your mobile banking, but you're using the internet, probably with your laptop or your app. Probably with your laptop, your phone, or your tab, So rather than using the mobile app, you go to their website, their platform, and then you carry out your banking services. What was the last one that I mentioned? Mobile money, right? Yeah, so mobile money is a situation where you have, you use your phone to carry out, monetary transactions. So you transfer money, you receive money, like what MTN has with Momo, and some other guys. I think Nine Mobile has Nine Bank, and a few of them like that. So that's mobile money. Without most times your bank account number would be your phone number. So anybody who wants to do mobile money transfer will then go to the platform and then transfer credit to you, which will then be money because it's dedicated towards that particular transaction. So the top trends that we're looking at that will shape the future of fintech will be mobile money and cashless transactions. COVID-19 pandemic, of course, pushed a couple of things along this line. We've seen even the Central Bank of Nigeria has tried to push a lot around cashless transactions. The limit around what you can withdraw from banks and stuff like that. It's something that will grow and will keep growing because it kind of helps, right? Less physical interactions when it comes to money. You can go anywhere in the world. You can travel without necessarily carrying bundles of cash with you. So it just makes a lot of convenience around banking. Cryptocurrency and blockchain, said a little bit about that. You're seeing the adoption of blockchain particularly across, different networks and platforms, and banks are beginning to adopt blockchain because of what it does. I mean, it's a very secure technology that for you to be able to alter, that chain of transactions, you need to, in fact, it's almost impossible. It seemed impossible before, but when people started finding ways of hacking blockchain, then it has moved to almost impossible. And the reason is because it will require a lot to be able to break that chain that exists when each transaction takes place. Cryptocurrency, well, yeah, people have moved on, you have the likes of stable coin now, which is a form of cryptocurrency that is backed against a stable commodity or fiat. So you can have a cryptocurrency that is backed by the US dollar. The difference or the attraction that cryptocurrency has over central bank digital currencies is while they both use blockchain technology, cryptocurrency is not typically tied to fiat. For instance, the Central Bank of Nigeria, with their distrust for cryptocurrency, they did their own central bank digital currencies. We're the second country in the world to actually issue our CBDCs. But at the last time I checked, there were only about 800,000 users that had signed up, but then about 200,000 active users. If you contrast that with cryptocurrency in Nigeria that has over 30-something million active users, that's quite, so even though they use the same technology, the intent behind them makes it kind of different because cryptocurrency, Bitcoin went to like 60,000, right, at one point to $1, even though now, it crashed. But people still believe in it, that it will come back. When you have, stable coins, though, you back it maybe against gold or oil, which are relatively stable, maybe less of oil, but gold that tends to go up, or the US dollar that is stable all through. So it's cryptocurrency. It's not a CBDC. It's a cryptocurrency created as a cryptocurrency, but it's backed by a stable fiat currency or commodity, and you can even back it against algorithms at times. You have API, application programming interface, which allows you to transmit data. If you go into things like open banking, for instance, which is an area of fintech, APIs are used a lot in that side. There's artificial intelligence, you can have interactions across different platforms with AI. You then have big data analytics, which allows you to generate data and then use it to create marketing products tailored made towards particular people. Big data has grown through the years. In places like US and Canada, they're always in need of big data analysts because you must seem like you can't have enough of them, right? There's so much going on. A company like Netflix now, they use big data to determine our viewing choices. How many people use Netflix here? Not so many. Is it expensive like that? Or some of us are watching African Magic. Anyway, so for companies like what they do with big data is they would determine the kind of programs we like to watch. I'm sure that we even see this with YouTube as well. If you watch one of Ashake's video and say, "Oh, this nice video," suddenly they just be disturbing you with Ashake, even though that's not the kind of music you like, but you just keep seeing it. And if you now decide to just click on something that is not the right thing, and then your boyfriend or girlfriend, what are you watching? You'll be like, no, no, but when you now look at your history or your recommended, it will be as if that's what you watch. But what Netflix does is that they will then gather all of that data and then use it to create programs. If you like 50 Shades of Grey, they will now know, okay, these people, maybe like 200 million people, because I think they probably have like over 300 million customers. They now say, okay, 100 million people like 50 Shades of Grey, so let's do 100 Shades of Grey, because maybe, there's an upgrade from 50 now. Because they know that people will then watch more, or something like that, So with fintech, if they know that, okay, maybe Gen Z like this kind of products, or services, they can then tailor, the kind of products or services that generation will like, so that they will then be marketing it to them and then, grow their customer base. That's how big data works. It monitors consumer behavior, basically, to determine what's going on there. Next slide. Okay, before I move into this one, does anybody have any questions? So I mean, I can take questions at the end, but I'd like to take questions before I move so that, things are not... Okay. Wow, okay. And are they hearing me clearly too? Okay. Yes, please. Sorry, is there a microphone? Is there an extra mic? Maybe just two questions so that...
Where? Who asked the question?
Over there. And then if somebody has asked a question that you had in your mind, you don't have to now try and rephrase it and say, well, that,
Be
just...
humble, not to ask again.
They will cover.
My name is Ola Adeosun.
All right.
In the course of discussing the evolution of fintech, you talked about P2P, and you likened it to MMM. I want to know why we'll have to discuss why the importance or the usefulness of P2P when it is settled that MMM has been declared to be a sort of fraud.
Like a Ponzi scheme, Abi?
Yes. In fact, the creator of MMM, Mavrodi, if you check his name on go on what do we call it on the internet, he has been formally declared a financial fraudster and a criminal.
Okay,
So why should we now adopt a scheme in that
okay,
realm?
fine. Does anybody have, thank you, Ola, for your question. Does anybody else have any other question? Okay, thank you. Thank you, Ola. So the fact that somebody used, the creator of MMM was not the creator of P2P, and P2P still exists till now. In fact, there are some fintechs that do P2P. So let's just get that right. The fact that somebody used something for fraud or for a bad thing doesn't mean that that concept is bad. What P2P does is it allows you to have a platform where lenders and borrowers can interact, right, free from any, interactions. It's based off trust. So if I have 1 million naira and Ola says he needs 1 million naira, he goes to the platform, which is run by a trusted or a credible moderator, right? So I have 1 million, you need 1 million, there's an agreed interest of 3%. Then it's easy for me to give you that 1 million, right? Because the trusted platform has ensured that whatever collateral, whatever checks needs to be done. So they look at maybe your credit history. Some people use a credit bureau, for instance, to determine your credit line and see if the person is a fraudulent person. So if your credit line shows that you have a job, which probably, you're getting something from that, you've never defaulted, it's not like you've taken loan from somewhere else and defaulted, your credit is good, I will give you that money, right? And then you pay back. It's simple. We don't now need to go to a bank because, okay, think about it now. If you go to a bank, before the bank will give you the loan, probably takes maybe like what? At least maybe 1 month, right? You apply, they will check, everything. They will tell you, bring these documents, bring that documents, bring a guarantor, bring collateral. But with P2P, it's easy. Like you just go there and do it, and you pay back, you move on. Now, that can work in any part of the world. And in a place like maybe the US and the UK, Canada, lots of them, they have very strong credit bureaus that make sure that it will work. But if you now come to a system where people are just doing whatever they want, and if, like you said, the man has been declared a fraudster, then that means his intention in the first place wasn't proper. It doesn't now mean that P2P in itself is an improper form of fintech, because that's not the intention. It's almost like with FTX that happened with Sam Bankman-Fried. You will now say, okay, cryptocurrency is just fraud. Well, the jury is still out as to whether that is what it is. But if you look at the history of fintech in itself, and when Bitcoin came into play and Satoshi was creating his white paper, it shows you why that came in the first place. If people are now using it for fraud, it doesn't mean that Satoshi himself meant for it to be fraud. Does that answer you, really? I used MMM as an example so that the P2P would come to life and you understand what it was. Some people used it, got their money back, and moved on because their intention was pure. Loan money, collect, whatever you want to do on the platform. So P2P still exists, and some fintechs in Nigeria still provide that service. So these are some of the regulators of fintech in Nigeria. Again, note when I was starting out, I did explain that fintech, as it is, doesn't have. Okay, well, somebody said legal regime. So that can be a very loose way of describing it. There's a legal regime, but you don't have one, where you just say this is, yes, you just say, okay, this is fintech, and all of that. It has different sides to it. Yeah, I'm actually writing a book on fintech law and practice in Nigeria. So when it should be out maybe by June this year, I will, for everybody who is part of this training, I will discuss with Ade and see how we can probably give discounts for as many who would want to buy that book. Thank you. And the intention is for for people to make it kind of easier to appreciate what goes on in this place. I remember when I was part of this committee that was set up by SEC in 2018 to come up with a roadmap for the use of fintech in the capital market. And between that time and now, we've seen so many things happen. But when we were trying to draft some kind of regulations and also doing our background search, I reviewed about 4 countries: China, Malta, Singapore, and the UK, to basically look at what their fintech laws are. Now, some countries like Malta, for instance, Malta actually has a virtual assets act that deals with crypto and all of that. So that's kind of codified, makes it easy to pick that book and understand, okay, these are the laws that regulate, and there's only one law. In Nigeria, sadly, there are a lot of things. Part of the recommendation that we actually gave was for but because, I'll give an example now. CBN deals with payments, lending, but SEC too, has some fintech companies that, use them for some kind of similar, asset management, stocks, so crowdfunding, for instance, whereby you collect, especially the reward-based crowdfunding, right? Whereby I may have a project now, which is where some of the crypto guys, when they're doing their initial coin offerings, sort of work around that whole crowdfunding thing. Well, that can be quite complex sometimes, But for the reward-based crowdfunding, the SEC released its rules, whereby if you want to crowdfund towards a project, let's say I inform the public that I'm trying to build something around, what will I say now? Anyway, I'm trying to build some kind of technology, something that, you just need to say, I want to open a bank account, and then the AI starts to open a bank account for you, something like that, and I say, okay, I'm trying to raise $2 million. And then everybody in this room, decides to contribute, maybe like $100 each, so we crowdfund towards my project, and then you get interest, some kind of interest margin by reason of your crowdfund. So maybe there's a debenture certificate that I'll give to you. When I'm done crowdfunding, I will then pay you back, with interest. Now, the SEC has its crowdfunding rules, but you may still say, but maybe central bank will feel that there are some things here that may require that we're looking at. So what we had actually said was, let there be like a body where you would have these different regulators, maybe like a committee. Yeah, like a one-stop shop, whereby if you want to get a license, you just go to that one-stop shop, and then all of these regulators can actually deal with that. We did something like that in the Nigeria Startup Act. So if they decide to work with that, it may help. But the chief financial regulator, of course, is the central bank, because they deal with financial services. Then you have CAC that has its capital limits. For instance, if you're trying to get a payment service, a PSSP, payment solution service provider license, I think it's 250 million, 250. PSP is 250. The other one is 100 million. The CBN will set its regulations, but then the CAC, once it sees anything in your objects that shows payment service, they will say, no, you can't come here unless you've gone to CBN and all that. So in a way, they do that. The SEC has spoken about that. Need that, with some of the things that they do around tech companies, and now with the Startup Act, where they will play a role, that is also, they also play the role in fintech regulation to a degree. NIPS is, the interbank settlement system. For most fintechs, especially if you're trying to release products that will be used by the market, like payment terminal service providers, PTSP or PSSP or IMTO. For most of them, you need, and then if you also want to, have a digital bank or a mobile payment, to be on the mobile payment platform, you need to go to NIPS, because they have to test your technology to be sure it's fit for purpose, and then they will integrate you into the banking system so that you can then be part of that whole space. For the NDIC, CBN had released some directives. And of course, we know the purpose behind NDIC, right? To give level of comfort to customers that if something happens to your bank, for instance, you can still get part of your deposit. So the NDIC, the CBN wants fintechs and financial service providers to be registered with the NDIC and take up their insurance policy to protect consumers. And for anybody who is involved in any of these fintechs that take your money, it's good to be sure that they're registered with the NDIC. You then have the NCC, right? So when it comes to your star 737 and all those other short codes, you know, you need to get your the fintechs need to get their short codes from the NCC. You then have NOTAP, where you're dealing with technology transfer across borders. If you're trying to import technology, which some of these fintechs have to do, to be fair, because it's not everything that is produced locally. Where you're acquiring foreign technology, then you need to register with NOTAP. And then similar to 10DIC, the National Insurance Commission, which will also be ensure that fintechs have the right type of insurance policy in place. So these are some of the regulators. I think the FCCPC should have actually been here because if we followed the news, because of the activities of some of the lending companies, especially of a particular nationality, you know, whereby they give loans, short loans, but then they start to send all those SMS where they will say this person is a crook and things like that, basically invading people's privacy and a lot of other unethical things. The FCCPC has had to bring out their own regulations, even though it's like an interim regulation, but they released that last year for those online lending platforms. Next slide, please. The NIC. Which NIC are you referring to? No, no. I said the FCCPC. No, so you were you were reading something else. Confess. No, but did everybody else follow my trend? But I'll just reiterate. So what I had said was that the FCCPC should have been on that list, and I explained why. I said because of the activities of online lending platforms who have taken up some unethical approaches towards naming and shaming, to use your words, of defaulting debtors. The FCCP had to step in, you know, to ensure that um, whoever is in that space does things in line with best practices and do not invade people's privacy and also manipulate data and just do a lot of unethical things that we've seen them do within that space. So that was what I said with regards to that. And I'm sure that some of us are familiar with this whole scenario, right? Yeah. And the FCPC, being the watchdog for consumer protection, you know, deems it that this is, you know, a place where they have to ensure that there is sanity. So for the legal regime, you know, like someone said, it's not as if there's an absence of legal. In fact, maybe there are even too many. So just imagine now you're a fintech that wants to do just one thing, and then they will now say, you will even say, you know what, I'm not even setting up this fintech. If this is all what, which is where, you know, the lawyers and compliance guys come in. And there are a lot of opportunities here because, you know, who better to understand law and statute and policy and guidelines than the lawyers, you know. So this is where some of us make our money because we're able to understand it and give our legal opinions around it. Here's the amazing thing there, though, about advising clients and writing about it. Once you've done that 2 or 3 times, it becomes easy to understand, and you know, so you've gained the knowledge pretty much. Helps you the next time the client comes along. But a fintech lawyer always has to be upskilling himself because there are so many regulations that came up. Last year alone, CBN probably did maybe about 4 or 5, and I tried to review all of them and do an article on them. So that way, it's easy to, you know, get on. They did one on contactless payment, even though that was a draft regulation, whereby they're trying to, okay, yeah, let's have more contactless. So for scheme cards, right, your debit and credit cards, rather than having to put it in and all of that, you know, just tap and pay and go. You know, from that can now devolve other Internet of Things development, whereby you can just have a bracelet now. That bracelet contains your data, so you just put your bracelet, boom. And then in the US, they're moving beyond tap and go, whereby you can just scan it small and it just picks it up. And, you know, so that requires NFCs and some other stuff. But anyway, so yeah, these are some of them guidelines for regulations, CBN microfinance policy, all of these ones. Next slide. I don't think I need to take you through what each one is. And I don't think those other ones are even comprehensive because there's a place where I probably have like over 20 CBN regulations, but I just picked those particular ones. You then have some of these ones. I've mentioned the crowdfunding rules. You have digital sub-brokers rules, robo-advisory rules, rules on issuance, offering, and custody of digital assets. You have Investment and Securities Act, SEC regulatory incubation guidelines, the Nigeria Startup Act. So all of these, and sometimes, like I had referenced earlier, you see some of these regulators having challenges, and I'll tell you these ones because, I'm aware of some of them. The SEC rules, for digital assets, for those folks in the cryptocurrency, virtual asset space, this looked like finally, solution had come because, most of the guys who do cryptocurrency and virtual assets and all of that, they've been having challenges with CBN now. I'm sure like most of us here know. In 2020, SEC had issued a statement on, digital assets and had basically said they were the regulator for cryptocurrency. A week after that, when I saw the director of legal at SEC, he told me that CBN summoned them. That, are you people okay? Like, how can you claim, so that was the problem, And of course, I'm sure some of those things were what motivated CBN to now, in February 2021, now issue their letter, basically saying that those who deal in cryptocurrency, should be taken off the banking platform. They didn't ban cryptocurrency anyway. If they could, they would have done that, but they couldn't ban it because they don't regulate it, So you can't ban what you have no power over. What they just did was they quote unquote banned banks and other financial institutions from allowing people who operate in that space to bank with them. But an interesting thing actually happened with the digital sub-brokers rules, which again, if some of us have followed, a company like Chaka, by the way, I have an article, I'm not plugging the article, but I have an article coming out on Business Day today where I actually spoke a little bit around that. So if you patronize Business Day, you can read it. But what had happened with that was, Chaka was doing trading in foreign stocks, right? I'm sure that some of us use Bamboo, Rice Viced, and the rest of them. How many minutes do I have left? 20 minutes. How many hours is this? Okay, but it was condensed. Okay. So am I ending by 2 o'clock? No, that's fine. No. We don't even need the extra time. It's fine. Yeah. So with the digital sub-brokers rules, let me just see if I can. Okay. With the digital sub-brokers rules, what then happened was that Chaka was able to, well, they felt they had now scaled the hurdle because the SEC said Chaka was trading foreign stocks, and so you can't do that because the Investment and Securities Act, provides for how you can trade in foreign stocks. So Chaka now said, okay, what can we do? Because we have partners in the US that we're doing this with. What can we do? They said, okay, get digital sub-brokers license so that you can be a sub-broker today. Okay, so they got digital sub-brokers license. They went on the news. In fact, they even did one small seed raise of like 1 million plus where they said it's to now. And then the next thing that was that CBN now froze their account and that of Bamboo and Ricevest and the rest of them, and said that they were dealing in foreign exchange and all of that, violating the forex rules and manual and miscellaneous and all of that. So they froze them for like over 180 days anyway, which was in violation of the rules of court and some other things. But Ricevest and the rest of them went to court and challenged. I think it was Ricevest in particular that saw it till the very end and at least got a ruling that affected everybody else. But the court held that yes, they touched on a few things, and because it was an interim order that CBN got and not a final order of some sort, and they didn't pursue it further after that interim order. A lot of things were not resolved. But one thing that the court did say was that that letter that the CBN wrote does not have the force of law. So in other words, they couldn't ban banks and other financial institutions from doing that unless if they have a regulation or something like that that has been issued. Funny enough, the CBN hasn't done anything after that. So, yeah, but these are other relevant laws that that affect the regulatory incubation guidelines by the SEC allows companies to come into the incubator program that have fintech products and services, which are regulated by the SEC, and then it allows SEC to determine whether they can then enter into the market. Next slide. I'm even almost done, Seth, so that will just rush across. So here are some of the segments of fintech in Nigeria and the different laws that affect them. Is this thing too bright like this? Okay. No, yes, no, yeah, perfect. So that's good. So payments, is a very wide space, right? So you have payment solutions, you have payment terminal, you have payment service banks, you have super agents, you have mobile money, you have switching companies. Then, even though that the regulatory sandbox guidelines were issued in 2020, yeah, 2020. Last year, like December last year, the CBN actually said, finally, the sandbox will be operational. So the way the sandbox works is, it's an environment where you can take innovative products and services that maybe don't exist in the market presently, and then take it to the sandbox, which will be a controlled environment where you can test those products and services. You can test it within the sandbox environment, and CBN can give you some kind of approval in principle. Then you can now test it within the market, see how it operates within that space, and then subsequently CBN can then give you a license or permit you to operate in the market. The sandbox has been used in quite a number of jurisdictions, to very positive effect, because you see, they always say that the innovators are ahead of the regulators. They're always creating new things. Now, it's difficult for CBN to keep up with everything, right? So if you have, and SEC has a similar thing like I mentioned. Now, if you have, a sandbox, that means you can carry what CBN has no idea about, and then test it there. If you're admitted into the sandbox, and CBN gets to understand that technology, CBN can probably even issue guidelines for it, and then you can launch in the market. So that's a good one. For the license categorization for Nigerian payment systems, what CBN did with that was to categorize the different payment services into like 4. So, and then they also had one license, a payment solutions, a PSP license, that covers payment systems solutions, covers payment terminal solutions, and also it allows you to carry out super agency. So that with that PSP license, you can carry out those 3 services. But if you just want to pick one and get that license, then you can simply pick a PSSP or a PTSP or a super agent license. For payment solutions, it covers things like collection, so like revenue collection or bill collections, some of your payment gateway services that allows you to transact. So when you do your mobile money transfer, some of these other transactions, there's a lot that goes on in the background. If you go to an e-commerce platform, say Amazon or Jumia, and you're buying something, you realize, you enter your card details there, payment goes through, your product comes to you, but in the background you have a payment processor, which is processing some of those transactions in the background. Without the payment processor, they can't go through. You also have your card scheme, going on in the background as well, because they then have to confirm, from your card scheme, then they have to confirm from the bank, that you're paying from, and then the bank that it is going to also has to approve. So all of this happens in the space of what? How many seconds? Think of Fintech 1.0, they would have said, please just get out of here. But now, all of that happens. So those ones can get a PSSP license, all of that thing I've described. That's why you have the likes of Flutterwave, Paystack, and a few of them there. Then you now have your payment terminal, PTSP, which is what, POS guys use and all of that. Your super agent license, is sort of like agency banking, whereby you can then be an agent to a commercial bank, which allows you to then set up in some of these rural areas and provide services to people there. There's mobile money. There's also payment service banks, the likes of your Momo, Airtel has their own. I can't remember the name now, but you have those ones. So basically carrying out banking services again in rural areas. PSBs are not just limited to telcos, right? If you see the PSB regulations, retail banks like the likes of your ShopRite can actually get a PSB license, which would make a lot of sense, right? Because then you can just carry out your banking services with those guys, especially if they're in areas that don't have easy access to, bank. A country like India, for instance, used the PSB to bring in to over 100 million customers into their banking platform. Again, I think sometimes the challenges we have are not the absence of regulations and laws, really, but the implementation. For online lending, you have money lenders law of various states, which is what a lot of these fintechs use as their first license when they want to go into lending because it's kind of easy. Some states have it easier than others. Lagos is a bit of a challenge these days because I've been doing some for clients that have lasted several months. In some places like Abuja, in less than 1 month, you can get a money lender license. And in some other states like Ogun State, sharp, you know. But Lagos, at least last year, there's one, we've not even finished it now. That one is over 6 months. Funny thing there about money lender's license is that it expires 31st of December each year, right? So they were supposed to do the inspection, which is the last stage. You inspect, give your report, and then issue license. They said they were going to inspect throughout December. They didn't come. Then first week in January, they now told us to come and renew. We said, oh, Oga, so you already know the question we're asking now. So anyway, but those are the challenges we have. Now, you have CBN's licensing framework for relevant financial institutions. So, basically sets out a framework for lending and all of that. Then, like I'd mentioned earlier on, sorry, this one that's printer's devil, I think. I guess the guy that worked on my slides was smoking pot or something, because just delete that last one there, please. Marine oil pollution, I don't understand. Anyway, next slide, please, quickly before.
Sorry, Davidson. There's somebody on Zoom that has a question.
Oh, okay.
So
But next slide, please, before we. Yeah, you can. What's the question? Move.
please project
Next slide, please.
and then let the person ask the question.
Okay.
There is someone that raised his hand or her. Yes, Vanessa will be. Vanessa, can you hear me? Please unmute and ask your question, Vanessa. Please kindly unmute and ask your question. Yes, we can hear you.
Good afternoon.
So we lost audio. We didn't lose you. We lost audio for most part. Yeah, we could not. Vanessa, you're back. And please just be a bit more audible. If you can, speak our Nigerian English.
don't mind him, Vanessa. I can hear your English, but I just didn't hear you very loudly.
So we
So
are saying the same thing.
no, no, no. Speak for yourself. Or I don't know. Maybe she can type it out or something. Yes, we can hear you. Yes, we can. So I got the preamble. I just didn't get the question. So you can skip that and just ask the question directly. Okay, thank you. Thank you. Very, very relevant question, Vanessa. And I like your hair, by the way. That's not a Me Too something, right? I don't. I mean, you have to. So it's gonna be like, anyway, yeah. So good question because I'm actually doing that for a few of my clients now. I think the best way to appreciate that is to look at the mischief being solved, right? So the problem in the first place was that people were getting these licenses. See very nice DPs on there. I shouldn't. People were getting licenses, right? And then they were just doing stuff. Again, let's look at the mischief. So the mischief was somebody downloads these apps. The way that those apps work is when you download it, in Nigeria, we tend to just say, I consent, I accept that, so you just be accepting the app. But they have their terms and conditions, which says that as you are downloading that app, they have access to your phone, the personal data that is in your phone. So the NDPR, which regulates, data, personal data in Nigeria, has already provided for what you have to do when you are processing personal data. So just have that at the back of your mind. When they now have access to your personal data and you default, I understand that there's the part of them being loan sharks, whereby they will probably have, maybe they will give you 1 million naira, then it starts to increase, every month. But again, that's contractual now. There's nothing that our usury laws in Nigeria, it's not like in the US where they've set a cap for private lenders. So you can't just do, in Nigeria, I don't think there's any private lender cap. So that's not something that they can solve, but it's the data issue that is paramount. So when the person defaults, they now start to invade your personal data space and then be sending WhatsApp messages to, not just to people who are your guarantors. If they go through your phone and they see your father's name, they will send to him. If they see the babe that the guy has been toasting since, they will send to her. If they now see your pastor, that one is hallelujah. They'll just send to you because they know that, so that ruins more things than one. And again, when you are processing personal data, you then need to look at the 5, principles that the NDPR sets out as the legal, principles for processing personal data. There's a level of responsibility that is on you when it comes to processing personal data. Now, if you've conducted an NDPR audit with the NDPB, that is the Data Protection Bureau, there are standards you have to meet, and I've conducted quite a few, maybe like over 100 audits. So I do know what we try to tell the clients to do. If you've conducted an audit and it's been filed with the NDPB, there is the letter that they don't give a letter, but there's this code that they give you that shows you are compliant. That in itself would mean that your processing level is compliant, right? Now, if you end up not complying with the NDPR and submitting your audit with the NDPB, that means that you're not going to use data well, and so you cannot be licensed at the end of the day. So I think they're trying to look at what falls within the mischief that they're trying to solve, which is that data, personal data, privacy breaches. The lending rates, again, like I said, is a different thing. Unless if you feel that there's something more that they should be trying to get, because note that there's already a regulator that issues that license to them in the first place. So they're not trying to regulate another regulator, which again would be a problem. What they're simply saying is that this space that the problem is happening from, let's ensure that it's dealt with. Does that answer you, Vanessa? Does that answer your question? Yeah, but all right. Thank you, Vanessa. All right, so thank you. Let's move on. I probably have like 5 more minutes. I want to just use it. Back to my slides, please. Oh, okay. Next slide. Next slide. Okay. You then have, so I mentioned payments, and talk through some of the payment, regulations, and then lending as well, which is where Vanessa's question came from. Then you now have buy now, pay later, which allows you to um, buy something and then gradually pay it off. It's still evolving in Nigeria. In some countries where they have very good credit systems, it's working. I do have a few clients that we're advising around the buy now, pay later. They're really, some of these laws that are here really, they don't touch on BNPL particularly, but you can just use them to, say, okay, at least you can advise your clients on what they need to be aware of. But the way that it works is, you want to get a phone, maybe the latest iPhone. You then let them know that this is what you want to get. They can give you the phone, and then maybe each month you can be paying off and be offsetting it. And so it may take you 1 year to pay it off. Of course, there's no free lunch even in Freetown, so there will be interest, that will be accruing with it. What it just does for you really is that it allows you to get the phone and start using it. I remember there was a time that I was in Canada and I wanted to, I use Android, by the way, the Samsung. I've been using Samsung for years. I don't, so I wanted to get a new one, probably going for, I don't know, was it 500 and something? So I asked them, I saw them selling it in that store. Like, they want to buy it. And I said, well, okay, there's a, buy now, pay. That's not the word that they use, but it's a credit, stuff. So I was like, okay, can't I just pay for it? And they said, no, I have to use my credit. I was like, man, so there's a reason why those things exist because, again, they have to make profit, but that's the way that it works. You buy now, so you have the asset or the liability, any way you want to look at it. You have it now, and then you gradually start paying, And then the same thing applies to rent now, pay later, by which they can pay your rent to your landlord on your behalf. So you move in, enjoy yourself, but you now be paying them and then paying with interest, as it were. Next slide. And hopefully the tenants don't run away before then because let me not say much about that. So cryptocurrency, we've touched on it. These are some of the, stuff that have happened and the press releases, CBN's press releases, and all of that. So cryptocurrency. Again, like I said, this SEC rules, I didn't finish speaking on that. So SEC in June last year, they issued their rules, which, again, people shouted Uhuru. Now, the rules are no walk in the park because to register and get any license is about 30 million naira in itself, So yeah, and then the procedures are almost like if you want to get a stockbroker's license because you need to have a fidelity bond covering 25% from an insurance company. They try to make it as detailed as possible. You can be a custodian, you can be an exchange, and all of that. Some of us, we even reviewed the rules and started putting on our, how we put it to LinkedIn. I reviewed the rules. And so some of my clients have now applied for those rules, for the license. They were ready to pay and move on so that they can stop. Because what people have done since CBN's stuff came in is that they cannot access the banking networks in Nigeria. So people have decided to do what is called P2P, slightly different from the other P2P we spoke about, but similar concept to whereby rather than using the banking network, you just say, okay, I have crypto to sell that I want to buy, so you guys just buy and sell, devoid of your normal, the way you would have done payments for those things. But folks presume that if you have this license, CBN will then allow you to, for everybody who has this license, for instance, you'll be able to access the banking network. So SEC rushed and issued this. The reason why they were issuing it is because, you see, they're dealing with more issues than just the Nigerian local market. They belong to global communities, right? Okay, 1 minute. that demand a couple of things around compliance, and so they needed to comply with that, which was why they issued this. But then CBN came again, and so those rules have not been operationalized yet. So they exist. If when they become operational, they will definitely help, and then they can be amended. So for now, some of us have just gathered documents together for our clients, and we're waiting for the green light from SEC. Robo advisory, I had touched on this briefly. It allows you to do, you have a robo, an AI, it can be a combination of different emerging technologies that you use to trade in stocks. So rather than leaving it to a stockbroker to be guessing which stocks to go with, you just let the AI know, okay, these are my preferences, right? I'm looking for a stock that maybe in the next 5 years will go for X, Y, Z. It will bring out those stocks for you, and then you can pick. Some of them, you can even tell them, trade on my behalf, just buy stocks for me, just buys for you. So it can potentially take away those stockbrokers who used to go around, Broad Street then, and but that market will be disrupted. And the SEC has issued these robot advisory rules. In terms of adoption, I'm not sure how many Nigerian companies have really adopted it, because you do need to have some stuff around it. I have a client though who is working with their foreign partners to create the right platform to work this out. So hopefully when they fully launch, they're relatively mainstream, capital markets firm. But yeah, it's going to help quite a bit for people who don't have the time. Those days, I don't even look for them now, but you open newspaper to be looking for the stocks that are raining. I mean, now this chap just solves all of that for you, so you don't need all that stress. Next slide. Then crowdfunding, again, I had mentioned crowdfunding. There are now crowdfunding rules. They cover P2P lending, equity crowdfunding, reward-based, of that. You then have your PSBs. Next slide. Neobanking, which is your digital banking, covers a lot of stuff around that space. So you can go online now. It was on one panel once. The CEO told me that in less than 24 hours, they can onboard you as a client and also give you loan. I was like, wow, maybe I should have been banking with them years ago. But that's what some digital banks are able to do. They can just quickly give you a loan, and then you move on without even ever seeing you. They don't even want you to come to their office. Some of them don't have offices like that. Remittances, international money transfer, mobile money remittance service, so these are, they allow you to do international money transfer. So you no longer just need Western Union and the other ones now. There are quite a number of them that have come out in that space. Next slide. Okay, so I wouldn't go into all this, but I've sort of touched on the different payment licenses, right? Dimension Payment Solutions, PTSP, Super Agent, PSSP, switching and processing, the likes of your InterSwitch, and I believe Flutterwave also got one. Mobile money operations, I mentioned that as well, the regulatory sandbox. Next slide. I've spoken about this, the PSS that allows you to do those three services, Super Agent, PTSP, PSSP. Next slide. Switching and processing, facilitate transactions and all of that. Card processing, so like I said, when you're trying to make a transaction, it covers all of that. Non-bank acquiring services. Next slide. They can also do PTSP and PSSP services as well. Mobile money, again, spoken about it. You can use short codes, USSD, to do that. You can do wallet creations and management. So you can just set up a mobile wallet and then start to do your transfers. They also issue e-money. Next slide. Sandbox, spoken. Next slide. So the challenges, well, we already know some of them, of course. Access to banking platforms. Those in the rural areas have challenges. Well, there's talent. It's getting lesser these days, especially with the Jakba bug that has beaten a lot of people. First one there, though, major fintech regulation, like we've mentioned. So you then have to rely on so many licenses that we've explained, I remember then when we were doing that committee work, somebody was like, he has 5 licenses just to carry out lending. It's crazy now, because those licenses, they don't come cheap. But because you don't want to fall foul of the law, you just be getting license, be acquiring license. like that. So basically, lawyers should keep tabs of latest developments, regulatory interventions. Of course, there's still a few other things that lawyers can do. There's probably those who want to learn more around the technology. I took that out anyway, but of course, there are so many courses you can take. And the good thing there about lawyers in this space is that you can be multi-dimensional. And like I said, having a firm background and knowledge of different areas of law makes you to be that consummate lawyer that can pretty much do quite a number of things around this. So thank you so much for your time. God bless you. I don't know if there are any more questions, but
Come on, is that the clap we'll give for all this? Okay. Any question online and then one? Okay. Please don't forget introduce yourself. Ma, we should give you an award for most attentive. I don't know. Participatory. Because this is second. You are asking question every time. Good. It's not a bad thing.
Thank you very much, sir. Thank you, sir, for the presentation. You have identified one of the core problem challenges that we are having in the fintech space, which is the lack of definite outline of what licenses are to be obtained. Are you aware of any solution? Because it's an ongoing problem. Most fintechs complain that they have to take several licenses that they do not even need just to carry out in one transaction or the other. So are you aware of any solution being provided by the regulators to solve this problem? That's my question. Thank you.
Well, good question. I think one way of putting it is we are the solution providers because we solve the problem for our clients. Those clients that have several licenses probably got the wrong lawyer or advisor. But then again, what are the regulators doing? I think that's why you're seeing so many of those things, come up, the different regulations that they're trying to streamline. So I give an example now, when in December 2020, the CBN did their categorization of payment systems is because they wanted to now break down some of those payment systems so that people know the license to get. If you want to get PSSP, payment solutions, this is what PSSP covers, this is how much it is, this is what you will do. If you want to do payment terminal, you don't go and do too many things, just do this. If you want to be able to do that plus super agency and do all of those things, then get a PSS license. They also said you cannot do switching and do some of these ones. You cannot do mobile money and do some of this one. They now said you can also set up a payment holding company that can now get different licenses that don't need to commingle so that they can operate at the same time. So can the regulator do better? Yes, they can do better. But there are so many things happening in the fintech space, and it's always evolving. So maybe what they need to do is to have, maybe one, a compendium, maybe two, condense some of these things, and then maybe three, just have one fintech license, right? Have one fintech license for payment. So anybody who wants to do anything in payment, just get the payment license. Have one license for lending, so that anything you want to do in lending, have one license for neo banking or digital bank, so that you can just do all of those ones. Maybe those are the short answers to it. But when somebody asked the CBN governor something late last year, CBN governor said, go and get commercial bank license now, so that you can just do everything you want. Yeah. That's his own solution. But I've given you some that can probably work.
Okay, there's a question on. Oh, can we take the online person first? Is she or he able to unmute? The online person, engineer. While we wait.
Okay.
Yes, good afternoon. My name is George Ayanjankwe. I'm a pro-innovation, tech innovation lawyer, and I'm more interested in the dispute resolution arm of tech. And now, one thing has stumped me so far, relating with many people in the tech space, particularly the crypto space, is the issue of the paucity or the lack of options to enforce when things go wrong in the crypto space. Now, for instance, when it has to do with traditional lending, where you have maybe something in the cash system, that fiat currency system, you can always go to court, and then the court can wrap their head around it and enforce for you. But now we're since the CBN passed its regulations and now you have the crypto thing hanging in limbo, where something goes wrong, where there's a contract or just say there's a transaction and something goes wrong, someone goes away with money or somehow something goes wrong. What are the right now the operational means through which we can at least enforce or settle disputes in such a way that at least funds do not disappear completely. At least they can be recovered for clients.
Okay. Thank you. Just to say what is this microphone clear enough? Because sometimes okay. CBN did not pass the regulation. I remember saying that they wrote a letter, which the court said is not law. So then another thing that you also need, and it depends on dispute resolution around the crypto space that you're referring to, because if it's for transactions that are carried out, online, they do have systems in place, whereby money is kept in escrow, and then it doesn't mean that you will just make your payment and then run. Of course, some things can happen along the way. It then comes down to contract. Is your contract enforceable or not? There's no law that says cryptocurrency transactions are illegal, null and void. So that means you can go to court over the matter. Does that answer you? Courts, the court jurisdiction has not been ousted by reason of CBN's letter. And even if CBN says banks cannot provide services to cryptocurrency operators, it doesn't now mean that if you go to court will now say because CBN said this, you can. No, it's not illegal trading in cryptocurrency. There's a process.
There.
No,
Sir,
sir. No, sir.
please, there's somebody online that would like to ask a question. And you don't want them to feel left out, do you? Thank you. Eddie Young, right? I believe I saw the name right. Yeah. Loud and clear. We can see you too.
Okay. My question is, in what ways can lawyers be involved in data security and data protection as
Okay. Well, I mean, there.
We have a class, another facilitator coming to teach on data protection and data security and all of that after lunch. So
stick around for after lunch. But I'll just say though that I mean there are a lot of ways now you can upskill yourself. Like I had said, I've done quite a number of audits on data protection, data privacy. You register with the NDPR, with the NDPB as a data protection compliance organization. They do that annually, so they bring in people. But even while you're waiting to get that certification from the NDPB, you can also be learning quite a bit. There are a lot of courses you can take out there. I'll leave that for Tolumide, who I believe is coming to take that course so that he can expand on that. But there's so much that lawyers can do, and lawyers are even doing presently.
all right, follow-up question. It's been answered. Oh, okay. Since you could talk without having the mic, I thought you should ask your question. So, sorry.
There's a process. Thank you very much. So, I think if I'm trying to understand him, and for me, I don't think you answered the question. And I'll give you live scenarios. I have 4 clients who I'm trying to advise. They sent, or let's say we're induced to transfer cryptocurrency to a particular account. And then those guys disappear. And then I think the nature of his question is, what do you do to try to recover from those kind of persons? Then you go to court. A judge does not understand the English you are speaking because you are talking of Bitcoin and things like that. Or transaction is 0.2 something something, and then the court is like, please, I'm not even done with all of this. So how do you, or are there ways, coming from in his words, dispute resolution, the procedure mechanism that one can adopt, from what you know, that one can be able to recover or something, so that you don't lose out entirely?
Okay. Well, so what some people do is, and even Nigerians have started to um, specialize in that, is there are investigators who are quite good in tracking those sort of transactions, right, that take place where people disappear. Those people can actually track down that. But I'll also give you a scenario that happened. I mean, not same as what you've described, but there's a client of mine, a big cryptocurrency, organization. Not they're an international one, but they have local operations here. Somebody cloned a general's, ID and all of that, and bought crypto from them using the guy's ID. Fortunately for my client, though, my client didn't. I mean, they're a very transparent company now. So the guy bought crypto worth millions and all of that, and then transferred it to China, different things, and then disappeared from the whole thing. So the general went to court, got an interim order that froze my client's account. At least, again, it's slightly different. But if you're going to be buying crypto, you will do your due diligence now, right? And be sure of the company that you're buying the crypto from to protect yourself and not just see something online that says we're selling Bitcoin and then you now buy and start looking for them. So at least, if you look at most of the KYC documents for most of these crypto companies, in fact, it's almost mandatory because they do have self-regulatory organizations too that set out those crypto, AML and all of that, KYC documents that the person who is buying, needs to read and be sure of what is contained there. So that if you find yourself in a situation where somebody has taken off, you can at least track them to an extent. But I don't know what answer to give you. Maybe when Senator comes, because he does everything crypto, maybe he'll be able to tell you but for me, I think what I advise my clients to do, and presently I'm actually helping one of them draft most of these documents, is I say let your KYC be clear. And for the customer too, if you're buying, you have to make sure that you do your due diligence on what you're buying, because just like any other transaction that you're getting into, there are risks involved. Now, this is an area that has its own risks in itself. So why would you buy something without checking it out? At the end of the day, though, the courts are supposed to be where so even though the judge doesn't understand, you have a cause of action. There's breach. So you go to court. I just told you now that, again, like I said, even though that cause of action was pretty straightforward, but the court couldn't have understood what happened now. But the court knew, okay, somebody cloned and somebody hacked, and so they froze. So unless these people have disappeared completely off the face of the earth, but I believe you can still track. And like I said, there are people who specialize in tracking the paper trail when it comes to crypto transactions, And if you want, I can probably give you somebody's number. You can speak to him.
Sorry, there's a gentleman here that's been raising his hand for a while.
This kind lady here has been raising her hand.
Apologies.
In fact, let me give her my microphone because the
She's
ladies first.
also
Please.
very double.
Thank you. Good afternoon, everyone. My name is Tony Asada. I'm a founder of Sonesis Legal Practitioners. So I want you to comment just a bit on the the only startup act we have, latest one, especially with regard to the provisions on that created or that wants to create the startup portal. With regard to the issue of regulations and having like too many licenses for fintech, do you think that startup portal is going to do anything to rectify that problem? Or has it done anything at all to make, because I know the portal is to have an interface between startups and the MDAs, license and getting licensed and all of that. So what do you think of that? Is it doing anything to make it better?
Thank you, Toyin. So the Startup Act in itself, I would say that it's an ambitious law, and without trying to sound boastful, my humble self did draft that law, but the intention was not. So the intention, yes, is let us have harmonized regulations that affect the entire startup ecosystem, so that you don't have too many things along the way. So that is a role, but the act is very collaborative. So if you read it thoroughly, you see that we have things like that. The Secretariat shall collaborate with the CBN to work towards, so what you will see there with regards to the fintech space, for example, is that um, the Secretariat will collaborate with CBN and the SEC to ensure that there's a fast track process, for startups that are under the labeled process, to make it easier for them to get the license. But if you go to the earlier sections, maybe like section 1 and section 2 that deals with objectives, it's stated there that steps will be taken to harmonize laws that affect startups in Nigeria. So that's a forward thing that will happen. And to also prevent regulators from just waking up one morning and releasing regulations that will just destroy people's businesses. So let the council under the Startup Act have a say in how some of these regulations that will drastically affect fintechs, be discussed rather than just issuing something out. So it's going to be something that will happen down the line. But the portal is supposed to be a place where you will go to, it's an online platform. You will go to that platform and then coordinate with the regulators to ensure that rather than it taking probably 9 months to get a license, you probably get that in like 2-3 days, depending if you meet the criteria. But there will be that access you would have. That's the intention at the end. How many minutes left? Okay, him, then there's one gentleman here. Sure, fantastic.
Oh, okay. But I have quite a number of questions.
Just ask one, please.
Okay. You spoke about P2P, P2B transactions or FIs being able to enable individuals to transact together. And my question is regarding P2P loan. Like if, for instance, because I know that the lending sector is highly regulated and not everybody can, loan money. So if in such situations, like there's a technology that enables that or enables that software, P2P loan, is it possible that the individuals will be deemed as the lenders with the FIs be the financial institutions be the lenders in such situations, and if the individuals are regarded as the lenders, wouldn't that be contradictory? Like, wouldn't it be offending the law? And what's the view on states' money? No, sorry, states. That's the second question.
Are you trying to outsmart all of us?
Okay.
Did you understand this question?
Your question is on a P2P platform, right? Who is the lender and who is the lender, right? Yeah, no, so the lender would always be the institution, technically, right? So what then happens, though, is that you, the person who is giving the money, you are providing it to the platform who will then disburse it to the borrower. It's not as if you are doing a direct
Please mute
thing.
us. Can you unmute us?
Oh, really? Wow. Well, that's true. Just go to the...
Uncle, unmute. Sir.
Is that not the button down
cannot
there?
hear us because we are muted.
Take the cursor to the left and click on that button.
Exactly.
There
Thank
you
you.
Thank you. Yeah, so I was saying that for all intent, right, because that platform serves as the, maybe you look at it as adjudicator, right? So you provide the funds to that platform, and then the platform disburses it to that third party. But everybody is known, kind of, so everybody knows who is giving and who is receiving, right? So technically, the platform is the one that is disbursing the funds, but you're giving it to the platform. There's nothing that says you cannot give money, right? And even when you look at money lending, the money lending laws in itself, it's kind of geared towards the institutions that give the lending. So you can give money to someone. I'm sure that some of us have loaned money. They try as much as possible to set up following principles around lending in Nigeria. So when you go to the platform, whether you want to serve as a lender or a borrower, they always have that approach towards how to access as the lender, and then how they will disburse subsequently to the borrower. So it doesn't violate any the existing laws around lending. Last question, so we can. Okay.
Okay, good afternoon. My name is Disun Olofeku, Interprime Law Practice. Okay, so I want to just ask a question. We have a client that wants to start up like a fintech company, yeah, and looking at things, it's looking like the very first license you need to get is a microfinance bank license. I want to confirm if that is necessary in every scenario because, um, the client's idea is to just simplify payments. The client does not intend on holding people's money, but he has invented a process that is meant to make payments easier. And so perhaps he liaises with other banks that will create virtual accounts for each of his own clients and all of that. So is it really necessary to have a microfinance license in this kind of scenario?
Well, what he can do is to partner with an existing licensed entity, right? But that entity needs to get approval from the Central Bank of Nigeria in order for them to go into that arrangement with your client. Even though you said their intention is to what? To collect.
Payments.
No, if it's simplified process, then that's payment solutions now. It doesn't need to be a microfinance bank to simplify payment. How about now? That's PSSP now. Purely payment solutions now. I just explained when I was talking about how PSSP works and all of that, how it works with the payment systems to make it easy to transact. And I mentioned how there's a payment processor, there's a payment gateway and all of that to make payments work. So that's it. Microfinance bank, no. In fact, it doesn't even have anything to do with that because, like you said, it's not collecting deposits. It's not even disbursing money. It's just providing payment solutions. You should pay me for this. We should work this transaction together and then.
Okay, so there's like a comments, yes, and then we'll wrap it up.
Thank you. My name is Ifoma. So for the person who asked about crypto agreements, there is it's just a suggestion though. There's what we call blockchain contracts. So as your agreements for cryptocurrencies rather are not in the limbo. If you have a blockchain contract, it is there, and then if there's a breach, it provides an automatic remedy. So if your monies are there or whatever, if one person fails, the system automatically deducts the money or whatever covers the remedy. And so you can also check Rotimi Ogunyemi. He does blockchain agreement and all those.
Was that the question? That wasn't the question, because
No,
I had responded already to him on the escrow that it goes into now. But he said, and then he said that there wasn't that kind of situation now, right? Was that the question? Exactly, that's not the question. So don't ask a question that doesn't have solution, because when I was responding to him, I mentioned, the issue of depending on the kind of contract you go into, when you're carrying out those
Sorry,
kind
please,
of.
let
Okay.
me, it's not about contracts. It's not about escrow. You're saying somebody saw something online, buys stuff on crypto. I'm coming, please. Buys stuff on cryptocurrency, and it's different from what she's saying. What then do you do in a situation whereby it looks or it appears as if the person just disappears? How do you recover on that? How do you go to a court and explain in plain terms to make the court understand that, you know what, I want to get this person who is even not within jurisdiction? What do you do?
Okay. So what
Sorry,
I
just
explained.
before you answer, please, if you're the owner of, if this person is here, there's ash color, right? Hash Venza Ekbe, that's EPE 630. I think you're obstructing and it is urgent, very urgent. Thank you.
Yeah, so I think you're working on a lot of presumptions here that the judge will not understand, and then the judge will also not even want to hear you. Because if you have an expert who comes to court to give expert witness to explain what the judge doesn't understand, our law still provide for that. But I also to explain to you too about the investigators and that as well. So you have the courts, you have the investigators that can help you track. If none of these things will answer your question, then maybe I'm not the person that will be able to provide the response, because there's no magic wand that can be waved. Like I said, I had answered based on what the former right was heading towards, but he said no, that it wasn't that. So we can't be going there if it's a different thing. And then you came in another angle again. So I guess my work here is done. Thank you, everyone.
Wow. So please, guys, for me, can you give him another round of applause? So small secret. Our very first career training for lawyers, Davidson was one of our facilitators. So it's amazing to welcome him back a second time. And just like Chudi, we're very lucky to have him. He came into Nigeria literally just yesterday and is here today. So please, a round of applause for him. All right, guys, I hope we've had a great time with our second session. It's been great, right? Davidson is in the room. Let's let him know. How was the second session? If it was great, can you say great? Awesome. Thank you so much, Davidson. We really appreciate you. All right, guys. So we have one more model for today. It's going to happen after lunch. And that's going to be on data privacy and protection. We're going to have Olumide Babalola come here to speak to us on the subject matter. It's also very interesting because not only is he an expert in the area, but he has written 2 books on the subject matter, which are also available here, which you can check out on your way through or back from lunch. So please, lunch is served. Just go downstairs, the same venue, and enjoy yourselves. We'll be back by 3 o'clock. Thank you so very much.